It makes me chuckle a bit when people complain that crypto companies don't invest customer funds responsibly. Of course they don't. If they knew what a responsible investment looked like, they would never have gotten involved with crypto to begin with. Everyone needs to be reminded how the brain of a crypto or finance bro works. If they convince you to give them your money, even if under false pretenses, in their worldview, they earned that money.
You start with a company that builds a box. And in practice, this box, they probably dress it up to look like a life-changing, world-altering protocol that's going to replace all the big banks in 38 days or whatever. Maybe for now, actually ignore what it does or pretend it does literally nothing. It's just a box. So what this protocol is, it's called Protocol X. It's a box, and you can take a token, you can take Ethereum, you can put it in the box, and you can take it out of the box. Like you put it into the box, and you get an IOU for having put it in the box, and then you can redeem that IOU back out for the token. So far, what we've described is the world's dumbest ETF or ADR or something like that. It doesn't do anything, but let you put things in it if you so chose. And then this protocol issues a token. We'll call it whatever, X token. And X token promises that anything cool that happens because of this box is going to ultimately be usable by governance vote of holders of the X tokens. They can vote on what to do with any proceeds or other cool things that happen from this box. And of course, so far we haven't exactly given a compelling reason for why there ever would be any proceeds from this box. But I don't know, maybe there will be. So that's sort of where you start. And then you say, all right, well, you got this box and you got X token. And the box protocol declares or maybe votes via on-chain governance or something like that, that what they're going to do is they are going to take half of all the X tokens that will have reminted, maybe two-thirds though, two-thirds will have for X tokens, and they're going to give them away for free to everyone who uses the box. So anyone who goes, takes some money, puts it in the box, each day they're going to airdrop 1% of the X tokens pro rata amongst everyone who's put money in the box. That's, for now, what X token does. It gets given away to the box people. And now what happens? Well, X token has some market cap, right? It's probably not zero. Let's say it's, $20 million market cap. And a bunch of arbitrageurs
from like first principles, it should be zero, but okay.
Sure. Okay. I completely reasonable comment.
Cheating people isn't something to be ashamed of. It's something to be proud of. It's a sign of intelligence. If you can sell ice to an Eskimo, you don't apologize for running a scam. You run away with the loot and brag about it to your friends. Have no illusions about these people. Their goal is to run away with your money and brag about it to their friends. The irony of centralized institutions failing while they simultaneously preach decentralization shouldn't be lost on anyone. But as crypto winter becomes crypto Armageddon, I'm not sure people will take away the right lessons from these events.
Look, we're going backwards anyway for a while. There's, the development needs to slow down. There's too many people trying to make money out of crypto, and crypto doesn't make money by itself. So the industry is pretty big ecosystem. I still think the play is Bitcoin. Funny enough, right now, I think with all this drama that's happened globally in crypto, I put a tweet about it today. I think Bitcoin is probably the best risk-adjusted bet right now in crypto. So owning Bitcoin is reasonably safe. It's going to be it's a global, effectively it's a reserve asset for the crypto industry. And I've had my criticism of Bitcoin, but I think it's got a lot less dependencies. And in fact, if you're looking at a hard currency to borrow money against, you should lend money against Bitcoin, not FTT, for example. Right? And so that's the issue.
Instead of abandoning all Ponzi schemes, they will likely just shift to decentralized Ponzi schemes because they are misdiagnosing the fundamental problem with this ecosystem. The problem with crypto is not the organizational structure of the companies involved. It's their value proposition. I've talked about this many times in the past, but value and price are not the same thing. Value is what something is worth. Price is what someone will pay for it. And people often misprice assets. The price is often wrong. You cannot conclude that just because some NFT sells for $100,000, it's now worth $100,000. So next week, if it's back on the market for $90,000, it's now cheap. No, that's not how valuation works. This is the last lesson crypto people will need to learn before they finally abandon their unsustainable projects.
I don't ever disagree with the Bitcoin assessment. I think like it to me is just a different class of asset now. It's not related to any of these other things that we're seeing. And so when we kind of start merging them, it's unrelated for me. I think it's uncorrelated to all this stuff.
Exactly. It's uncorrelated. It's reasonably uncorrelated.
But he's like, yeah, that's the point. That's a good thing.
Yeah. Okay. So I think this is probably like, let's just keep this in mind. Like Bitcoin right now is 10% below the peak 5 years ago, before you adjust for all the inflation that's happened in the US dollar and just the time and how the network's been built out. It's actually pretty cheap at these levels if you assume, 5 years ago, Bitcoin hit $20,000. It's at 18K right now. I just think that, as a former Bitcoin maxi, I'm like, and then I got reformed. I'm kind of heading back. I wouldn't say I'll ever be a maxi again, but Bitcoin is probably going to be the saving grace for crypto, because it's just widely held.
Well, Molly, here's that 1 year chart we were just referring to with the double bottom, if you remember.
Yeah.
Crypto people will eventually discover the words cheap and expensive don't apply to something with no value. No price can be justified or explained rationally for something with no value. Taking your crypto off exchanges to protect them from centralized Ponzi schemes won't magically imbue them with value. To have value, they must be useful. They must have utility. They must provide a service people need or want and are willing to pay for. The services must be offered at a competitive price and be profitable without any Ponzi-like dynamics. If you're not looking for metrics to answer those questions, you are not early. You are not an insider with secret knowledge about the coming Great Reset. You're just another lemming, about to be led off a cliff.
Yeah, no, that's the thing. Like, it's like, oh, this is ridiculous. This is a perpetual motion machine. And yet here we are in 2022 and the industry keeps going.
Yeah, machine's still going.
Meanwhile, so the way DeFi works is you put in money in a box that you think more people will put money into the box. And the way VC works is you hear what your friends in the industry are investing in based on 2027 numbers, and then you also want to get on that. So it's really just FOMO all the way down.